What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered. What's up, everybody? Welcome to another episode of the CPA Zone. Today, we're going to talk about the new draft tax bill that was just put out by the House a few days ago. It's the One Big Beautiful Bill, as they named it. This bill has in it a broad set of tax reforms. A lot of items are really extending key provisions of the Tax Cuts and Jobs Act that was passed back in 2017. And they're also making some tweaks and changes to a few provisions there and introducing some brand new tax benefits. So let's dive in and talk about what this bill had. Now, remember, this is a draft House bill, has not been voted on yet. So there are definitely going to be changes. None of this is permanent yet. House will pass their version, then the Senate will take it up and pass their version of a bill. Then things will likely be negotiated, and then we'll have an actual bill that with the final results. And who knows what that'll actually look like. It needs to pass through reconciliation, so it's not supposed to add to the budget deficit at all. So who knows what we'll end up with, but here's what's in it. So it kind of gives you an idea of where things are looking. First, we have an extension. So this bill makes permanent the Tax Cuts and Jobs Act marginal tax rates, so that top bracket being 37%. If this doesn't pass, the tax brackets are set to revert back to the pre-TCJA brackets in 2026. So we had a few more brackets in there, and the top rate being 39.6%. These brackets will be adjusted for inflation every year starting in 2026 to maintain those bracket thresholds. It includes a permanently increases standard deduction to where it is currently. Remember, the standard deduction practically doubled under the Tax Cuts and Jobs Act. And this too will be increased by inflation each year. There's a temporary increase to the standard deduction for tax years 2025 through 2028 only. An additional $1,500 for single filers and $1,000 for married filers. It also provides an additional $4,000 standard deduction for seniors, so age 65 and up. And that too is also in the 2025 through 2028. And the reason you see a lot of these things being temporary is the bill needs to go through reconciliation, so it cannot increase our deficits. So some things will have to be temporary, and they usually do those in the early years because they look at the cost on a 10-year rolling basis. Next, they're going to increase the SALT cap. So it's currently at $10,000. That's your state and local taxes, so your real estate taxes, your income taxes paid. If you itemize, you get a deduction on Schedule A. Currently, that's limited to $10,000. It will increase to $30,000, but there's an income limitation. So if you're married filing separate, the income limit is $200,000. If for everyone else, it's $400,000. So then there's a reduction applied, and that reduction is 20% of your income over those thresholds. It's $200,000 and $400,000. So if you're a married couple making, say, $500,000 a year, the reduction is 20% of your income over that threshold. So 20% of $100,000 at a $500,000 income level would be $20,000. That takes you right back to the $10,000 limit. Now, it will not be reduced below that limit of $10,000. So higher income earners, their SALT cap's going to remain the same. There is a permanent extension to the child tax credit. That's currently $2,000. Temporary increase for 2025 through 2028. We'll bump that up to $2,500. The qualified business income deduction. So Section 199A, sometimes you hear referred to as the QBID deduction. That's the 20% deduction that's allowed on business income from pass-through entities. This bill proposes to increase that percentage to 23% from 20%. And also expands and modifies some limitations for high income earners and adds a dividend, a BDC interest dividends as another qualifying type of dividend that will be eligible for this treatment. Next, it will increase the estate tax exemption to $15 million. And this was set to revert back to the $5 million base in 2026. So now it'll be $15 million. And it's going to permanently extend the higher AMT exemption thresholds that were provided for in the Tax Cuts and Jobs Act. Remember, AMT, alternative minimum tax, used to impact people in kind of like the middle income ranges. Now the exemption's much higher, typically on incomes over $1 million, with a few exceptions in there, and that's going to be made permanent. So most middle-class taxpayers will not be impacted by AMT. The mortgage interest deduction, that current limitation, you're only allowed to deduct mortgage interest on $750,000 of debt on your home for your primary residence. That's going to be made permanent. It used to be $1 million, so this was actually one of the items in the Tax Cuts and Jobs Act that hurt taxpayers. They're going to make that permanent, apparently to help pay for the bill. They're also going to keep the casualty loss deduction limitation as is. That's going to be made permanent. Right now, you can only deduct casualty losses if they're in a federally declared disaster area. Again, not a good move here, in my opinion. And then they're going to permanently eliminate the miscellaneous itemized deductions. That's those itemized deductions subject to 2% floor. You used to be allowed to deduct those prior to 2018, before the Tax Cuts and Jobs Act. They were set to come back in 2026. This permanently eliminates them. A few other things in here, some new items are no tax on tips. Remember, this was a campaign talking point for the Trump administration. This allows employees to deduct reported tip income from taxable wages through 2028. The no tax on overtimes, also a temporary deduction for overtime pay through 2028. And there's income phase-outs here for higher earners. There's a deduction for car loan interest. So individuals will be allowed to deduct up to $10,000 on interest paid for cars. Again, only for 2025 through 2028. There's income limitations here. So the income limit is $100,000 a year for single filers and $200,000 for married. So no benefit for higher income earners there. And there's some modifications to 529 expenses. Now you can include a bit more for K through 12 education costs, not just the tuition. So materials, tutoring, therapy, some other items there. And then last but not least, my favorite piece of this bill is bringing back 100% bonus depreciation. So that was set to currently 2025 is at 40%. Was set to go down to 20% in 26 and be fully phased out by 2027. This brings it back 100% for property acquired and placed in service after January 19th, 2025, and that will run through the end of 2029. So until January 1, 2030, we have 100% bonus depreciation. I think this clause of the bill stays and passes. It does have bipartisan support. There was a bill last year that passed the House under the Biden administration, never made it through the Senate, but it was set to bring back 100% bonus depreciation. So I think there's a good chance of this one remaining in there. And that's going to be great for our business owners and real estate investors. See a lot more cost segregation studies coming for your real estate professionals and anyone using the short-term rental loophole. So good news here. Hopefully this stays and comes back when we see an actual tax bill get passed. So that about does it for today. I hope you found value in this episode. If so, please leave a 5-star review and hit that like and subscribe button. Until next time, have a great day. One last thing before you go. We have put out a free ebook for our listeners. You can find a link to this in our show notes. It's called the Rental Real Estate Investor Tax Guide and covers all the basic tax-related information for real estate investors. We hope you like it. Again, go to the show notes to download your free copy. So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulisgroup.com/contact. That's ThePulicegroup cpa.com/contact.